Hello traders, I'm back with one more very interesting video. So as the slide represents, today we will be discussing about the Ironfly, when exactly we have to do the adjustments and when not to do the adjustments. So there are like common myths pertaining to Ironfly, wherein majority of the retailers will be doing the wrong adjustments. They do not know when exactly what adjustments have to be done, and even there are certain cases where actually we should not be doing the adjustment, but still majority of the retailers will end up doing the adjustments because that's what they have been taught. Okay, so today I'll just clear out all those myths, guys. Okay, let me see whether the volume is full. Okay, now I'll take you to my real trade. Okay, so this is one of the Ironfly which I've basically deployed on Friday almost at 2 p.m. Now the question is like, why did I deploy this Ironfly? Guys, whenever you deploy any strategy, be it Ironfly, be it debit spread, right, it has to be backed up by the price action. If you are just deploying the random trades, sustaining in the market, coming up with the profit, saving your capital will be like very difficult. Okay, why did I deploy the Ironfly on Friday? Let me take you to the Bank Nifty chart. Okay, so this is Friday, guys, right? If you look at this thing, this green candle, Friday almost at 2 o'clock or 2:30, I might have deployed this Ironfly with just one view. If you look at this white trend line, this is my price action. Whenever this acted as a rejection, basically. Okay, this acted as a resistance 1, resistance 2, resistance 3, almost resistance 4, resistance 5. So my view was, if Bank Nifty goes up, this white color trend line will act as a strong resistance. We never knew it can break out the resistance, or this will respect the resistance. If this gets respect the resistance, then what happens, right? Let's say if this gets respected, it will come down. So then I'll be able to trap the market into my Ironfly. Simple, guys. Okay, here I've deployed the trade, it went up, this will act as a resistance just in case if it comes down. So then I'll be able to trap the market within this green zone. That's the only thought, guys. Right or wrong, who cares? If it is going against my view, that's what all about this video. I'll tell you what to adjust and when not to adjust, right? When to adjust and when not to adjust. Okay, let me again take you back to my trade. So ideally, technically, the trade might have been, right, when I've deployed the Ironfly, the price might have been in the center, right? Friday and then Monday, it made a moment of almost like, see, it was standing here. Now if you look at the market is exactly standing at my call side break even. Okay, guys. One more thing is like, majority of the retailers will ignore this break even points, this break even and your buy position, this break even point and your buy position. So whenever you're deploying any strategy, guys, whatever buy position, right, see 40,900. Okay, this is 40,900, that should have some significance. Why exactly you are buying 40,900? So this is the area. Post this, you'll get your maximum loss. What is this? Basically 40,820, this one I meant to say 40,800 is basically your break even. So since from this point your loss will start, but you should know, starting from this position till this position is your minimum to maximum loss, and anywhere if the market expires behind this point, this is your maximum loss. Got it? So this is your minimum loss, guys. Just in case if the market expires here, let your loss would be 2,369, that's it, but your maximum loss is 4,369. Your maximum loss will start from this break even. What is this? 40,900, right? Your buy position, basically your buy position. So from here, if the market expires anything above 40,900, your loss will be static 40,369. Same with this thing. This is almost like zero loss here at the break even, and from starting from this position till this position, you will have your minimum to maximum, and behind this, below this, you'll have your maximum profit. So we are discussing about basics, but believe me, majority of the retailers are not even aware of what is this break even, right? Whenever you are deploying the Ironfly, ensure that these are round figures, and you should match this break even, right? 40,800, let me take, right? You should know that 40,800 should be, see, now let me put a line. Okay, randomly put me a line and just I'll go to 40,800. Okay, this is the way you have to see. So now, don't you think this is a confluence zone? So 40,800, right? It exactly matches with its white color trend line. So this will act as a strong resistance. It will, sorry to say will, it might act as a strong resistance. All right. So now let me again take you. So now, the moment the price comes here, 90% of the retailers will jump on to do the adjustments because that's what they've been taught, right? The moment the price comes at the break even, do the adjustments. Now, see, basically, why do we do the adjustments, right? Basically, your adjustment should be view based. You have deployed this iron fly with a view of sideways. The market was standing here on Friday. Let me show. Market was standing here on Friday. All of a sudden, the next day, the market has almost at your break even. So this is not the sideways market, right? Because in one day it has given the momentum. Now you have to think, okay, I was sideways, but now the market stands here. There are two things, right? You have to think about, if what if the market keeps going up. You should have the view of the market. What if the market is sideways, right? What if the market goes downside? These are the three market conditions. One, two, three. So based on this, you have to decide your adjustments, guys. Don't blindly, the moment the price comes at the break even, don't think to sell from your put side. Do the reverse buying from the call side. I mean, for everything there, I mean, there involves some sort of trade logic. That's what I'm going to teach you. Okay, now let's discuss about first, what if the market takes a U-turn from here. That's it, right? The third condition, and then we'll come to second condition, then we'll come to first condition. So what if on the next trading day, what if the market takes a U-turn? Because this 40,800, right, it's a strong resistance here. There is a potential, right? Market can come down, it can go up, it can come down, it can be sideways. So let's discuss about all the three permutations and combinations. All right, guys, now let me delete this thing. Okay, what is the loss here? 4,400. Just keep this in your mind. What is your profit? Up to 15,000. Now, if at all your view is market might come down, okay, what you have to do is, like, there are multiple things what you have to do. Now, this is the best place for you to do the reverse buying. This is the best place for you to do the reverse buying if your view is market can take a U-turn. Not the major U-turn, what I mean to say is drastic U-turn, but maybe check this range. 1.55% is your lower side break even from the current market price. Okay, now what you have to do is, like, what will happen if you do the reverse buying on the PE side? Market is on your CE side. That's the reason we call it as reverse buying. Forget about the naming convention, guys. Forget about the naming convention. What is reverse buying? The only takeaway from this reverse buying is point number one. If you do the reverse buying on PE side, you'll get two advantages. First thing is, like, just because the market is standing here, you will get low premium here. Absolutely right. The testing side is call side, so your premiums will be very low. So if at all you want to do the reverse buying, you will get very cheap premiums wherein you can just reduce the loss on the put side. And then the second thing is, like, if market comes down, whatever reverse, whatever new strike you're selecting, the premiums will start building up. Meaning, see, when we buy the put, what is the view of the market? You want market to come down. Got it? So the first thing is, like, if you do the reverse buying, you'll get cheap premiums. The second thing is, like, if the market comes down, the premiums will shoot up. Now let me show you guys, right? I'll try to do the reverse buying by just booking 40,100. I'll book this. I'll go to 40,200. Only 100 points. I'm just doing the reverse buying just because we have two quantities. That's what. I'm just booking this, guys. I'm just booking this, exiting this with a loss. Obviously, right, with a loss, and then I'll just increase the quantity to 2. That's it. The moment we do this, now the put side loss has become 0. Obviously, right, when the view is the market can come down, so you have to safeguard your put side loss. But until 1.5% your break even, and then at least you'll get with your brokerage charges even if the market makes a downside circuit. Now, what happened to this loss, guys? let me deselect this. What is your original loss? Your original loss is 4,369. Okay, on both the sides. With one adjustment, with just 100 points roll up, what will happen to your loss? Just keep a check on this, right? 4,369, 4,316 loss equal on the call and put side. The moment you do one reverse buying, boom, right, the loss on the put side has become almost zero, and moreover you'll get with the 131 rupees profit if market comes down. And here, what is the significance, right? Your original loss was 4,369, and now your loss has just increased to 500 rupees. That's it. Again, let me check you. I'll show you. 4369, by just doing this, your loss has only reduced by 500 points on the call side. Even if this goes on the call side, we will think about the other adjustments. But how this 500 points got added here, and how the complete this 4,369 loss has become, in fact, 131 rupees is simple, guys. Check this premium. Okay, you are exiting this leg and you are buying a new leg. So what is the difference? 42 minus 32 is 10. Okay, now let me show you that. See, now you have to know this. 10 rupees is the extra debit what you are giving, into 25 is the bank nifty lot size. This equal to 250, but we have two quantity into 2. That's it, guys. So by just giving this 500 rupees debit, that's what, right? 4869 minus 4369, by just giving this 500 extra debit, you made your loss on the put side 0, and the additional 500 rupees got added onto the call side. That's it, guys. You have to know this calculation. Unless and until you know this calculation, you'll be not able to understand the trade. And what is the advantage of this thing? If literally if market comes down, you have zero loss on the put side. Additional 500 points has been reduced. But now let me uncheck if at all. Okay, now, okay, let me again show you. Right, this is right. Now, if you think that market will take a U-turn, so now this is the great position for you to deploy the broken wing fly. The call broken wing fly. Guys, you have to go for call broken wing fly only when the view is okay. It might go, maybe this might act as a very strong resistance, 40,900. Who knows? Rather than 40,800, if you feel 40,900 can also act as a strong resistance, let me go and plot this line by 40,900. Okay, so if you think this is a strong resistance, or else you can go for 41,000 just to see whether there is a false breakout or not, right? 40,100. Just because I'm just showing you in 1 day time frame, let me take you to 1 hour time frame so that you will get some more clarity, guys. Okay, now this is where your market stands. So let's say based on your price action, this will act as a strong resistance. If not, this might act as a strong resistance. Either it can come down from here, or else it might come down from here. If this is the view, right, this is a golden opportunity for you to do the reverse buying alone, and you can also deploy a broken wing flight. So let me show you how to deploy the broken wing fly. Okay, add, edit, right? So what is the where does the market stands currently now? Let's say 40,800. So let me sell this 40,800. Let me sell this 40,800, and then I need a protection on call side, right? Let me see. Let me show you. So how much premium we got? 200 and 200, 400. So let me go 1, 2, 3, 4. Right? Do we need protection on 1 second, guys? Right? Call side. Okay. Now let me increase the lot to 2 size, because we are trading with the original 2 to lot, right? Let me increase it to 2. This is how the broken wing fly, right? See, basically, again, I'm not confusing you. First, what we have done the reverse buying. This is the reverse buying. On top of reverse buying, check the loss. Your loss is 4,869. What if the market again goes up by another, like, for until 40,900 or 41,000, and then if it takes a U-turn, so then you have to deploy one more broken wing fly. So what is broken wing fly? 40,800 is straddle with a call protection. That's it. Now check the magic. You have a safety of till this thing, right? Even if the market goes, so now what is that safety, right? Almost 41,060, right? Your loss will start only from 41,060, guys, not even 60. I would say check this, your loss. Okay, yeah, your loss will start from 41,060, and check your loss. Definitely your loss will increase because you have deployed a broken wing fly. Your loss would increase here, but what is your view? You thought market will come to check the profit now. 17,519 is the profit. Unlimited loss starts only. You have a what do we say, a range of 1.21%, guys. I'm just showing you different adjustments. Now I know there might be a question, I'm just doing this during the offline hours, the premium would match or not. Definitely that issue would be there with a buffer of like 5%, 10%, but just I'm showing you. Even I can show you in the live market also, but just because today is off for the market, I'm just showing you all the different adjustments. Okay, this is the broken wing fly. So your market stands here. Bank Nifty, you have an additional range on the upside, and even if it takes a U-turn, so you have big range to get this maximum profit. And what is that range, guys? Check this. Check the range from 40,820 to almost like 40,500. So you have 320 points of range to get the maximum profit. This is the beauty of doing the reverse buying combined with broken wing fly. Okay, if I do not do this reverse buying, I want to just go with the broken wing fly. Yes, still you can go. Still you can go. Your loss is reduced here, right? Now you compare, right? Pause the video. This is just the broken wing fly, and this is combination of broken wing fly with it's taking with your reverse buying. And just if you want to go for reverse buying, right, just go for it. Your loss would be only 4,000, but your view is downside. So we have discussed about the downside move, and I can discuss 10 other adjustments also, right? Video will become lengthy, but now let me uncheck all these things. Let me take you to the base trade. Okay, now let's take an example of what if you have the view of market going upside. Simple, guys. Then if you have the view of market going upside, guys, don't do this adjustment, please. Majority of the folk will do this adjustment, right? They do the reverse buying, but there is no logic, right? The moment you do the reverse buying, your loss is has increased here on the testing side. If your view is, if bank nifty will go upside, then why the hell are you doing this reverse buying? This reverse buying makes only sense when the market takes a u-turn. Got it? But when the market is when the view of the market based on your price action is it might go up, then don't do this reverse buying, guys. Don't do this reverse buying. Unnecessary, you'll be increasing your. Rather what you have to do is like you have to get this 40,000. What is that? Let me delete this. Okay, let it be. You have to just get this, book this 40,900 and get it to 40,800. This is the panic side, right? You have to reduce your loss rather than looking out for profit. So what I'll try to do, I'll just exit this 40,900. Where is 40,900, guys? Okay, yeah, I'll sell and then I'll try to buy this. That's it. Okay, now one second. Let me clear out everything. So now 40,900 I'll sell, and then I'll just go for 40,800 and let me see what happens. Quantity 2. Now, with one adjustment, with 100 points roll down, your loss has been reduced from, what was the original loss? You're definitely right. Your original loss was 4,369, but now your loss has reduced to 1,654. But do the calculation. Why the loss on the put side has increased from, what was that, 4,369 to 6,000 change? Now you have to do that calculation. I've shown you that calculation, right? So whatever extra debit we are giving here on the testing side to reduce the loss, that loss will get added up here. Now if you want to reduce this loss, there are like n number of adjustments. You have to just go to my playlist, go to the debit spreads playlist and just see all the adjustments. I mean, if you're expecting me to discuss all those adjustments, this will take 5 to 6 hours. You have all the content. I'm just showing you with my real trade. Okay, this is the wrong myth of doing the reverse buying. Every adjustments are damn backed. It should be like backed up by the view of the market. So we've discussed about the downside market. We are just now discussing about the upside market. Now, if your view is upside, if your view is upside, then you can just try to sell some naked puts also here. Simple, guys. If your view is upside, if you sell some naked put, whenever the market goes by 200 points or 100 points, exit this put and aggressively move that put to also 100 points. Just you have to balance it. What I meant to say is, like, let's say if I'm planning to sell a put of this 192, that's it. Now the moment you do this, right, if the market keeps going up, if the market keeps going up, your loss, you're able to mitigate your loss completely on the call side by just getting this additional put. Let's say the market went by 100 points, guys. Let's say the market went by another 100 points. Exit this with profit, okay, and then aggressively move this to 40,600. So as and when you do, you'll be like able to increase the profit on the call side. And just in case if the market takes a U-turn from here, right, still you will have the big range, the big cone, so wherein you'll be like able to get still with the profit. You have deployed the Ironfly with a sideways market view, but the market has become directional. Still, logical adjustments if you do, you'll be able to safeguard your capital. You'll be able to mitigate your loss. And the good thing, what is like, if at all you are good at doing the adjustments, you'll be able to get into profit. That's it, right? 1,300 profit. And if it takes a U-turn, you still have. So, but you have to be like very what do we say, right, careful about selling the puts, because once if the market gives a drastic u-turn like 1%, 1.5%, 2% gap down, unnecessarily you'll be like ending up into loss. So when the view goes wrong in the Ironfly, guys, if at all you're looking to come out with the profit, you have the gambler mindset. Basically, when the view goes wrong, you have deployed the Ironfly with a sideways market, and if that has given the momentum, first save your capital. Try to mitigate the loss. Your original loss was 4,000. I would be happy if you make it to 2,000. I would be happy if you make it to 1,000, but don't look at the profit. Maybe I'm showing you the profit, but when you do it in the real market, this would be like showing like zero cost because we're doing post market, right? I'll still not take this 1,346 as profit. I'll take it as a zero, right? I'm just giving that buffer. So this is the way you have to do. And this is not the only one adjustments, guys. Just go back to my debit spread playlist, and you have like almost like 30 videos wherein we have discussed about multiple permutations and combinations, but I'm just showing you. Let me get it to base trade. Okay, see, now if at all you want to discuss, I can discuss for hours and hours, but this is what the Ironfly. Okay, this is my live Ironfly, guys. So now the reason why I've not done the adjustment is, like this is a critical resistance for me. If not, I'll not mind doing the adjustments only when this 40,900 gets breached. And what is my loss basically? Even Wednesday at 9:15, check this. Wednesday at 9:15, if I have a gap up of, maybe market opens at 40,900, what is my loss basically? Still I'm in profit. So guys, don't do the adjustments unless and until you see some loss, right? You should have the loss defined, right? So basically you're deploying 91,000 in this, right? Put a stop loss, whether 3,000, 3K is your loss, or 4,000 based on your risk appetite. Unless and until you see 30% or 40% of this loss as the MTM, don't even do the adjustments. Why you are? Because market is like something, it will go up, it will come down, it will go up, it will come down, right? This will play with the psychology. Don't get yourself into such a situation doing that aggressive adjustments. I've not done a single adjustment because my trade is not in loss. My stop loss has not been hit. My stop loss is 3,000. Even 50% of the stop loss has not been hit. This is where you have to control yourself. Don't do aggressive adjustment. The moment the market comes here, do one reverse buying, sell some position from here, deploy other trades. Again, if the market comes up, again you do, again you get retain the trade. Don't do those aggressive. You're making government rich. You're making brokers rich. You're making You got it right. You are actually sacrificing your capital by doing aggressive adjustments, and you'll be like reducing the profit range also. As in when you do the adjustments, this range will reduce like this. When I'm not able to draw it properly, right? This will reduce like this. Again, if you do one more adjustment, this range will reduce. So what will you get, guys? Right? You have to do the adjustments based on the view of the market. View is must. If someone wants to sustain in the market, but you feel like I don't need the price action, I'm a non-directional trade. If even if market goes up, I'll make profit. Even if market makes goes down, I'll make a profit. I mean, gone are those days. You'll get health issues, guys. I have this levels, that's it. I'll not do the adjustment unless this 40,100 gets breached with strong candle. Literally I mean it, guys. If this gets breached, this will act as a strong resistance. Even this will act as a strong resistance. If this gets breached, if this gets retest, and if it goes up, and then I'll think about what safeguarding my call side. Definitely I'll not do the reverse buying. And then now I'll try to sell naked puts, but obviously not get premiums, guys. Obviously you'll not get. Many of the YouTubers say that to start selling the naked put. Let's say the market goes like 40,900. Do you think you'll be getting good premiums? What I'll be doing is like, what I'll be doing rather than selling from here, what I'll do is like, I'll just try to plot a strong resistance where exactly we have a strong resistance. This could be my resistance one, and I'll see like where is my second resistance, and maybe 100 points above the resistance I'll try to sell from the call side. This is what we have to do, something unique, what the not 99% of the retailers will do. You will hardly get premiums, guys. Even if you want to sell three quantity, I mean, you'll increase your, what do we say, margin, but rather than that, sell it from this side. And this is where the contra trade comes, guys. I mean, if at all you want to join my paid mentorship program, right, this is where we do the contra trading. I'll not do end up doing all these adjustments. I'll just deploy if one more trade. Basically, to mitigate all this loss, I'll deploy one more trade. That's it. This is called contra. Okay, and if you want to experience that, go back to my playlist. There is a playlist of 19 videos wherein I've just discussed about all the contra. So this trade I've not combined the adjustments with contra. In general, I'm telling you, okay, see, I can discuss for another 1 hour, 2 hours, 3 hours, 4 hours. I mean, the video length, length will increase. But what I would suggest you is like, just go back to my playlist. You have all the so-called adjustments for the Ironfly and also for the debit splits. Okay, each and every adjustment, like broken wing fly with naked selling, just doing the reverse buying, right? Reverse buying with broken wing fly, all the permutations and combinations, all the videos are available for free. You can just go and enjoy those videos. So guys, if you feel like this helps you, please give it a thumbs up, and also please share this YouTube channel with your friends, with your fellow traders, so that even they get to learn. And also, if you're not yet subscribed, please subscribe my video. All right, thank you, guys.
The first step towards achieving your dreams is having the right coach. Get the best education with Hybrid Trader and make your options, strategies, and swing trading dreams come true. Download the app now.